Wow, you really had to be watching SoundHound AI stock back on May 12th, 2025. I mean, opening at $9.54, spiking up to $11.21, then closing at $11.02.
Yeah, that kind of intraday craziness definitely signals there's a lot going on under the hood.
Exactly. And that's what we're doing today, right? A deep dive into SoundHound AI, ticker SOUN, focusing on that specific point in time.
That's the plan. We've pulled together various sources, articles, research reports, trying to, really understand this company.
And for you, the learner, our mission here at the Deep Dive is always to cut through that noise. We want to give you the key insights on SoundHound AI, make it clear and thorough, but without getting totally lost in the weeds.
Right. So we'll structure this in two halves. First half, we'll tackle the business itself, what they do, who's running it, and their financial situation.
Okay.
Then in the second half, we'll look at market sentiment, who owns the stock, the big risks, and we'll wrap up with some key takeaways.
Sounds good. Okay, let's unpack this. What exactly does SoundHound AI do?
All right, so SoundHound AI, founded way back in 2005, they develop and license voice AI and conversational intelligence tech. Basically, they create the brains for voice interactions.
Okay, voice AI brains. How do they actually make money from that?
They talk about a three-pillar model. First is licensing think manufacturers paying to put their Houndify platform in products.
Got it.
Second, subscriptions. Clients pay ongoing fees for access. And third is monetization via partner products like getting a cut of advertising or transactions enabled by their voice tech.
So multiple streams there. It sounds like things might have shifted a bit recently, though.
Oh, definitely. 2024 was huge for them. They bought Amelia Holdings, that's Enterprise AI, and SYNQ3, which is big in restaurant AI.
Oh, okay.
And those acquisitions really shook up their revenue mix. Service subscriptions, especially in the Americas, saw a massive boost because of that.
Can you give us some, concrete example of what products are we talking about?
Sure. The core is their Houndify platform. That includes the basics: ASR, automatic speech recognition, NLU, natural language understanding, text-to-speech, wake words, all that foundational stuff.
The tech building blocks.
Exactly. Then they apply it. Automotive is big in-car assistance. They partner with Hyundai, Honda, Mercedes, Stellantis, Kia, Lucid, even Tencent Intelligent Mobility.
Wow, that's a serious list in automotive. What else?
Restaurants are another key area, especially after buying SYNQ3. We're talking smart ordering, dynamic drive-through tech, smart answering for calls. They work with Chipotle, Panda Express, Jersey Mike's, White Castle, Casey's, Burger King UK, and a big U.S. pizza chain, too.
Okay, so cars and restaurants.
Yeah.
Any other major areas?
Yeah, enterprise solutions through that Amelia platform acquisition. Think AI agents for customer service, IT support, and healthcare, finance, retail, energy, telecom. They just launched Amelia 7.0, calling it Agentic AI.
Agentic AI sounds advanced.
It implies more autonomy, yeah. And then there's SoundHound Chat AI, their own generative voice assistant, and of course, the original SoundHound music recognition app. Lots of people remember that one.
Yeah, the music app.
Yeah.
So where do they fit in the whole AI landscape? Are they a big fish?
They position themselves as a top independent voice AI player globally. That independence is key to their pitch. They're not tied to Amazon or Google ecosystems.
Okay, that makes sense.
They claim millions of products use their tech, billions of interactions yearly. Q1 2025 revenue was $29.1 million, up a huge 151% year over year. But again,
Acquisitions driving a lot of that.
a huge chunk, yeah. Important context. They do point out no single customer is over 10% of revenue, which is good diversification. And their bookings backlog future contracted revenue is apparently over $1 billion, like 6 years worth.
Over $1 billion in backlog. That's substantial. So their main pitch to clients is what? We're independent and growing fast.
Pretty much. Customizable, high-performance voice AI without locking you into Amazon or Google. They stress speed, accuracy, support for over 25 languages. Clients get control over their brand, the user experience, and crucially, their data. That's a big deal for automakers and enterprises.
Okay, I think we've got a decent handle on the what and the how they make money. Let's shift to the who. What about the management team?
Right. The CEO is Dr. Kivan Mohajer, a co-founder, been there since the start in 2005. Other co-founders like James Holm and Majid Imami are also in key leadership roles. So strong technical roots.
Okay, founders still involved. What's their track record look like, especially recently?
Well, definitely strong on the tech development side. Since going public in 2022, it's been about aggressive M&A, fueling that rapid revenue growth we saw.
I sense a bud coming.
Yeah, but it hasn't been easy. Persistent net losses, negative free cash flow, and the big one recently, disclosing material weaknesses in their internal controls. They also missed earlier profitability targets, like hitting positive adjusted EBITDA by Q4 2023.
Oof. Material weaknesses and internal controls. That sounds bad for a public company. How'd they handle that?
It's a very serious issue. It popped up related to accounting for those big acquisitions. It delayed their 2024 annual report filing. Management owned up to it, said they're working on fixing things, but no clear timeline yet.
And that led to lawsuits.
Predictably, yes. Multiple shareholder class action suits alleging they weren't upfront about these control issues, so they're dealing with remediation and litigation. And for you, the listener, these weaknesses are a major red flag about the reliability of their numbers.
How are they on transparency otherwise? Regular updates.
They do the standard earnings calls, SEC filings, report GAAP and non-GAAP numbers. But transparency hasn't been perfect. That delayed 10K is one example. It's also tricky sometimes to separate the organic growth from the acquisition growth purely from their reports.
Right.
And you really need to scrutinize big non-cash items like that $176 million gain in Q1 2025 because that doesn't reflect actual operational cash profit. You know, GAAP is the standard, but non-GAAP needs a careful look.
Okay, so you got to read between the lines sometimes. Any ethical clouds hanging over them besides the control stuff?
No major scandals per se. The main issues are those internal control failures and the lawsuits claiming misleading statements. There has been quite a bit of insider stock selling, including the CEO.
Oh.
Yeah. Now, some was under preset plans, maybe for taxes, they say. But the volume and timing, given the losses and reliance on selling more stock, it raises questions for shareholders about alignment.
Summing up management. Honest, capable, shareholder-focused was the verdict.
It's really a mixed bag. Technologically capable, seems so, given the founder's background. But business execution, financial management, more questionable with the losses and control failures. Honesty and transparency took a hit with the control issues. And shareholder orientation, well, ongoing losses, dilution from selling stock, and insider sales create some real concerns there.
Okay, fair assessment. Let's follow the money then. How are they allocating capital? Where's it going?
A lot is going back into R&D. Estimated $81 million for 2025. They're working on their core Polaris model, that agentic AI stuff from Amelia, and voice commerce. Plus more spending on sales and marketing.
And obviously, a chunk went to those acquisitions we talked about.
A big chunk. SOUN Q3, Allset, Amelia. The rationale is pretty clear. Buy growth, get into new areas, grab tech and talent, and hopefully cross-sell to the combined customer base. They paid using cash and issuing new stock.
What about giving cash back to shareholders? Any stock buybacks or dividends happening?
No, none. No history of buybacks, and honestly, it's highly unlikely anytime soon given they're losing money. Dividends, same story. Not happening now, not expected. Growth is the priority, not direct returns.
Okay, let's hit a key metric then. Return on invested capital, ROIC. How well are they using the money they do invest?
Not well at all. It's consistently significantly negative.
Yeah.
Like reports showing negative 68%, negative 47%, way below what their capital likely costs them.
And they're actually destroying value.
Based on ROIC, yes. The capital invested isn't generating returns above its cost. Now, some high-growth companies have negative ROIC, but SoundHound seems particularly low even compared to peers.
So bottom line on capital allocation, are they using it effectively for shareholder value?
The numbers strongly suggest no. Negative ROIC, ongoing losses, burning cash. Growth is happening, but it's funded by dilution. And the M&A, while adding revenue, brought risks like lower margins and those internal control problems. Their reliance on selling stock just to keep going highlights a financial fragility.
All right, let's dive straight into that fragility then.
Right.
Chapter 3, financial health. Give us the key metrics as of mid-May 2025.
Okay. Market cap around $4.45 billion then. PE ratio. Not meaningful because they're losing money. Expected to stay negative for 2025.
But revenue growth looks impressive on the surface.
Extremely. Q1 2025 revenue was $29.1 million, up 151% year over year. Full year guidance for 2025 is projecting maybe 85% to 109% growth. But analyst forecasts were all over the place, indicating lots of uncertainty there.
And profitability, margins.
Yeah, that's where it gets tricky. GAAP gross margin in Q1 was 36.5%, way down from almost 60% the year before. Non-GAAP gross margin also dropped significantly.
Why the drop? Integration costs.
Likely integration, maybe different business mixes from the acquisitions. Now, operating and net margins looked weirdly high in Q1, but that was because of a huge $176 million non-cash gain. Take that out, and they're still deep in the red operationally. Adjusted EBITDA margin was around negative 76%.
Ouch. Okay, what about debt? Are they loaded up?
Actually, no. As of March 31st, 2025, they reported zero debt. They paid it off
Oh.
by selling stock. They used equity financing proceeds to clear the debt, so their total liabilities to equity ratio wasn't too bad, around 0.48.
Okay, zero debt is good, but achieved via dilution. What about cash flow? Generating or burning?
Definitely burning. Free cash flow was negative $19.3 million in Q1 2025. For all of 2024, it was negative $109 million roughly. And estimates for 2025 were still projecting negative $55 million or so. Free cash flow per share was negative too.
And yet a $4.45 billion market cap. High valuation.
Extremely high, especially for a company losing money. The price to sales ratio was way up there, like 32.5x trailing, 26.6x forward. It screams speculation the market's betting big on future growth and eventual profits. Their cash balance end of March was $246 million.
So quick summary on financial health. Profitable, strong balance sheet.
Fundamentally, no, not profitable. The balance sheet looks okay, superficially cash, no debt, but that strength comes from selling shares, not operations. High valuation, negative profits. It's speculative territory.
Let's look at stability over time. What's the trend been like for earnings, say, since they went public?
Consistently negative. Net losses every quarter, every year since the 2022 public listing. FY 2023 loss was about $89 million. FY 2024 ballooned to $350 million, though non-cash charges played a big role there. No profit trend in sight yet.
Dividends, we already established, are a non-issue.
Correct. Not applicable. No dividends paid. None expected.
And debt management. You said zero debt now, but the reliance is on equity.
Exactly. They managed to pay off debt, which is good discipline in one sense, but they did it by diluting shareholders. So managing debt isn't the issue. The issue is the constant need for cash that forces them to sell more stock.
How about their day-to-day financial management? Working capital.
They had positive working capital, a healthy current ratio, so technically they could cover short-term bills. But, working capital efficiency kind of takes a back seat when the main story is funding massive ongoing losses and cash burn.
So, wrapping up financial stability. Earnings, volatile. Excessive debt.
Earnings aren't really volatile. They're consistently negative. No excessive debt currently, but that's due to equity reliance. Financial stability is precarious. Ongoing losses, cash burn, needing external funds. Management themselves even acknowledge their current cash might not be enough for future needs. That's a significant warning sign for you.
Okay, a challenging financial picture. Let's move to the market's view in Chapter 4. How does the market generally perceive SoundHound AI?
It's really polarized. On one hand, there's excitement. People see the potential, the cool tech in a hot voice AI space. It's seen as innovative. But on the other hand, it's widely tagged as highly speculative, super volatile.
Right, we saw that volatility. What caused the big swings?
Well, 2024 had that hype cycle, partly thanks to NVIDIA investing. But more recently, sentiment cooled off. The Q1 2025 revenue miss didn't help. And then the big hit came from disclosing those internal control weaknesses and the shareholder lawsuits that followed.
So specific news has really moved the needle.
Oh, absolutely. Q1 earnings, May 8th revenue missed estimates. Stock dropped about 8% despite the big YoY growth number. Earlier, when news broke that NVIDIA sold its position, that caused concern, pushed the stock down.
Even though NVIDIA's initial stake was small.
Yeah, maybe profit-taking, but the perception mattered. Then the internal controls news and delayed 10K back in March. That was a major blow to confidence, triggered the lawsuit.
Any positive news catalysts?
Sure. Ongoing partnership announcements like with NVIDIA for Edge AI, Tencent, Pindrop, Wrecker, those help. Product news too, like Amelia 7.0, voice commerce pilots, the restaurant platform updates. Those fuel the growth narrative.
What are the Wall Street analysts saying? Price targets, ratings?
It's pretty mixed there, too. You see ratings like buy or hold. Zacks average broker rating was 2.00. That's basically buy leaning towards hold. IND Money had 75% buy, 25% hold.
And recent changes.
Yeah. Post-earnings, Wainwright kept the buy but lowered their target. Wedbush stayed buy. Cantor Fitzgerald stayed neutral with an $8.50 target. There were earlier downgrades, too.
And the price targets themselves?
Yeah.
All over the map?
Completely. The range was huge, low end $8, high end maybe $26, $27. Average somewhere around $14 or $15 maybe. Recent targets were like $18 from Wainwright, $15 Wedbush, $10, $13 Davidson, $8.50 Cantor. Just shows massive uncertainty.
What about the traders? Short interest options?
Short interest is incredibly high. Like almost 33% of the float shorted. That's a huge bearish bet. It means lots of people expect the price to fall. It also makes it prone to short squeezes.
So, high conviction on the downside from shorts. Options market.
Option sentiment is a bit more nuanced. The put-call ratio was below 1.0, around 0.6, which technically leans bullish, more open calls than puts. But that ratio had ticked up recently, maybe suggesting more bearish bets or hedging. Total options open interest was really high, way above average, and implied volatility through the roof, near 90%.
Meaning traders expect huge swings.
Exactly. High shorts, high options activity, high volatility. It all points to a deeply divided market opinion fueling those wild price moves we saw.
Okay, let's look inside the company now. Chapter 5. Who owns SoundHound AI?
All right, ownership structure. Institutions hold about 34%. Roughly half of that is mutual funds and ETFs. Big names like Vanguard, BlackRock, State Street, Geode are top holders, but a lot of that is probably passive index money.
So not necessarily active bets by those big firms.
Likely not all of it, no. Insiders. CEO Malhotra has less than 0.5%. Other founders hold some too, but as we mentioned, there's been significant insider selling recently.
Right. March 2025 saw a lot of exec selling.
Yeah, CEO, CPO, CTO, CFO, CSO, a director. Over the last 3 months leading up to May, net selling was around 500K shares. Over 18 months, maybe 5.5 million net shares sold by insiders. That definitely raises eyebrows.
Who holds the rest then?
The public, retail investors, roughly 66%. So ownership is quite diffuse, no single controlling entity, but that high retail ownership probably adds to the volatility.
Any major governance red flags from the ownership itself?
No obvious concentration risks. The main things are that high retail percentage potentially amplifying swings, and the insider selling may be signaling, a lack of confidence or misalignment.
Let's zoom in on corporate governance itself then. Board structure, policies.
They have a board with co-founders like the CEO and CPO, plus independent directors. One director, Sroka, has finance experience and is on the audit committee.
Standard committees.
Yep. Audit, compensation, nominating governance committees, all with formal charters. They state they have governance guidelines, a whistleblower hotline. They tick the formal boxes.
But the elephant in the room is still those internal controls, right?
Absolutely. The material weaknesses in ICFR internal control over financial reporting found at the end of 2024 are a massive governance failure. It wasn't just one small thing, it was pervasive. Control environment, risk assessment, accounting for complex stuff like M&A and financing, segregation of duties, IT controls.
Wow. Pretty fundamental areas.
Hugely fundamental. It led to the delayed 10K accounting adjustments for Amelia. It just fundamentally undermines the reliability of their financial reporting.
And the lawsuit stemming from that.
Multiple shareholder class actions. They allege the company made false or misleading statements about its controls during that period from May 2024 to March 2025. That means financial risk from potential settlements, plus it's a huge management distraction. The lead plaintiff deadline was coming up end of May 2025.
Have they said how they're fixing it? Any updates?
They acknowledged the weaknesses, said remediation plans are underway, but in the Q1 2025 materials, there wasn't a specific update on progress, so it remains a significant ongoing risk. And ICFR weaknesses are just a major red flag for value investors.
Definitely. Okay, Chapter 6, Risk Assessment. Let's pull it together with a SWOT analysis. Strengths first.
Okay, strengths. Proprietary, patented voice AI tech they claim is superior. Broad language support. Growing list of big-name partners and customers. That independent platform is a key differentiator. Experienced tech leadership from the founders, and that strong cash position with no debt currently.
Weaknesses. We've hit a few already.
Yeah, quite a few. Consistent net losses, burning cash, declining gross margins post-acquisitions. Those material weaknesses and internal controls are huge. Reliance on dilutive equity financing, risks integrating the big acquisitions, still haven't proven they can be profitable. Highly volatile stock, significant insider selling.
Opportunities. What could go right?
The overall voice AI market is booming, so huge growth potential there. Voice commerce is an emerging opportunity. Expanding in enterprise AI with Amelia looks promising. Lots of potential to cross-sell and upsell to their combined customer base. International expansion is possible with their language support, and maybe potential for margin improvement if they scale and integrate well.
And threats. What could derail them?
Intense competition, especially from the tech giants. Technology moves fast, risk of their tech becoming outdated. Regulatory changes around AI and data privacy, macroeconomic downturns hitting customer spending, failure to integrate acquisitions properly, simply never reaching profitability, leading to more dilution or worse, losing key people, cybersecurity risks, and those ongoing shareholder lawsuits.
Let's touch on something specific, the 2025 U.S. tariffs. Any impact there?
Direct impact on their software services. Probably minimal, but indirect, yeah, could be moderate. If tariffs raise hardware costs for their customers, automakers, restaurants needing tech, IoT devices that could squeeze budgets, slow down adoption of SoundHound's tech, maybe lead to pricing pressure?
Could affect partners like NVIDIA too?
Potentially, yeah. And just general macro uncertainty from trade stuff can dampen spending. Some companies like Ford, Mattel cited tariff uncertainty. Maybe AI could help optimize supply chains, but it's not clear how that directly helps SoundHound's voice focus. So yeah, moderate indirect risk.
And just to hammer it home one last time, the internal control weaknesses and litigation risk.
Can't overstate it. The material weaknesses in ICFAR are serious, pervasive. They damage financial reporting reliability, consequences, delayed 10K, adjustments, lost investor confidence. The lawsuits add financial and distraction risk. And the lack of a clear update on fixing things is still a major concern. Big red flag.
Okay. We've covered a tremendous amount of detail on SoundHound AI as of May 12, 2025. Let's try to synthesize this. Chapter 7, conclusion.
Yeah, it's definitely a complex story. You've got this promising technology in a really exciting market. You see the growth potential. But then you weigh that against significant financial risks, those serious internal control problems, and what looks like a very high valuation for a company not making money.
How does it stack up against, say, classic value investing principles?
Yeah.
Like Buffett's checklist.
Right. Is the business understandable? Maybe, but complex. Favorable long-term prospects. Potential, but lots of competition and execution risk. Able and trustworthy management. The control issues and insider selling raise serious questions about trustworthiness. Sensible price tag. With negative earnings and high sales multiples, there's no obvious margin of safety.
So not really a fit for that style.
Not really, no. Based on those principles, at this point in time, SoundHound looked much more like a speculative bet on future potential rather than a solid value investment.
Well, hang on. Here's where it gets really interesting. We've talked a lot about their tech. But what if the real key to SoundHound's future isn't just the voice algorithms, but something else entirely?
Go on.
Think about the sheer volume of voice data they must be collecting. All those billions of interactions through Houndify, Amelia, the restaurant systems. In an era where data is gold, could their biggest, maybe most underappreciated asset actually be this unique, growing data set? And how might that play into the future of AI, personalization, maybe even training next-gen models?
Wow. That is a fascinating angle to consider. The value of that aggregated real-world voice data could be immense down the line, completely separate from just licensing the current tech. That's a great final thought for people to mull over.
So that wraps up our deep dive into SoundHound AI. We've looked at the business, the management, financials, market view, ownership, risks. It's clear, navigating a company like this requires digging deep and thinking critically.
Absolutely.
So what does this all mean for you, the listener? Hopefully, understanding these complexities helps you make more informed decisions as you navigate the tech investment world. If you found this deep dive valuable and you want to unpack more complex topics, definitely hit subscribe wherever you're listening.
And don't forget to check out the Stock Analytics AI YouTube channel for even more analysis.
Yes, please do. And the usual disclaimer that this was an analysis based on publicly available information as of May 12, 2025. It's not financial advice. Always do your own research before making any investment decisions.
All the sources we use today are linked in the description.